Another day and another group of former investment bank metals traders charged with manipulating gold and silver markets, whether that's spoofing or other charges associated with RICO charges and racketeering. So last week we got another set of charges. This time, instead of former Deutsche Bank metals traders or former Bank of America and Merrill Lynch metals traders, we got 4 former JP Morgan metals traders charged with a bunch of different charges, but they're probably going to have a bunch of the charges thrown out by the judge, and they will probably only have to plead guilty to one charge of spoofing, despite 8 years of evidence from 2008 through 2016 that this investigation supposedly took place, and how Deutsche Bank had to hand over 350,000 documents and 75 audio recorded conversations of evidence. Now, JP Morgan has already paid a $920 million fine. The number sounds like a lot, but relative to profits of how much these bullion banks have made manipulating the paper precious metal markets, whether that's the over-the-counter derivatives market or futures contracts, or manipulating gold and silver mining shares down, smashing them, that is a tiny fraction of the profits, the cost of doing business. The $920 million fine is probably less than 10% of the profits these bullion banks make each month manipulating precious metal markets and mining shares. So if you want to read more about the case, this short little article from Reuters updates it. But over the last month or so, when these other metals traders have been charged, the judge in federal court in Chicago has said that there was lots of evidence of many other charges, but the majority of these other charges that are way more serious than spoofing were all thrown out. So unfortunately, I expect this trend to continue. When I was in law school and I was learning criminal law, and my criminal law professor, who had a long history of being a defense attorney and dealing with RICO charges, warned us that if one of our clients got charged with RICO, they were effing screwed, and it would be 10 or 20 years minimum in prison for mandatory sentencing guidelines. That seems to not apply to white-collar criminals who are banksters. I get a lot of questions from listeners to this YouTube channel and patrons about how and when the precious metal market manipulation will end, and I cite James Turk's managed retreat thesis, but my analysis is more complete than that because I look at the supply side. And the precious metal market manipulation, it cannot cap gold below $1,000. All the miners would be bankrupt. There would be no new mine supply, no new physical metal, no new physical gold to appease demand. So all those central banks, all those investment demands from the Sprott Physical Gold Trust, private investors in China, India, Asia, there would not be any physical gold to appease that additional demand. The same thing goes for silver at $10. There is basically zero physical silver left that is economic to mine at less than $10. There are very few miners left on the planet that can even mine silver economically below 15. That is the current state for silver mining, and why so many silver miners, basically all of them, the last couple ones just caved in the last 6 to 8 months, have had to buy gold mines or gold deposits to develop in the next couple years. So if I could summarize James Turk's managed retreat, the bullion banks defend gold and silver at certain price levels until all that economic metal at that price has run out. So all the $400 gold that was economic to mine is gone. All the $600 gold that was economic to mine is gone. The $800 gold that was economic to mine, almost all of it's gone. The $1,000 an ounce gold that is economic to mine in the coming years, that will also be gone. And so there's going to be higher and higher prices for gold just to replace all the mine supply that was mined, as long as demand for the actual metal doesn't totally collapse. And the same thing goes for silver. In fact, it's even worse for silver, as I've demonstrated with grades and the cost to mine silver and the behavior of these primary silver miners that are now all transitioning to mining a large portion of their revenues to gold. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, financial education, and analysis than I provide in these short little free videos, there is over 180 articles, charts, and audio podcasts behind the paywall, including 25 new articles out in the last 11 or so weeks on a lot of interesting topics about gold mining, silver mining, precious metal royalty and streaming companies, the uranium industry, and a lot of other interesting topics, including how to get income in the gold and silver space, companies that are boosting their dividends. Despite what happens, the fluctuations in the paper gold and silver prices, or if oil prices rise or labor costs rise, there's a number of different companies that have different business models than just gold and silver mining that are far more insulated than the miners are. All for only $5 a month, the cost of a Starbucks cup of coffee. I charge less than anyone else in the space for premium content. If you don't like it, you can always cancel, although I think you're really going to like it. So if I could wrap up this short little video, it is good that more awareness is being raised about the manipulation of gold and silver. However, it's not going to fully stop anytime soon. It is far too profitable for the bullion banks to stop it. They make billions of dollars each month doing it in a lot of different ways. So this spoofing is just the tip of the iceberg. It will continue. Now, with that being said, though, there's a reason why the silver price is not capped at $10 or not capped at $15. And that's because all the miners would be bankrupt. All the metal would dry up. There would be enormous supply shortages of the metal. There would be no physical silver for industrial end users if the bullion banks capped silver at $10 or $15. So they try to defend price levels in a managed retreat scenario. And eventually the silver price is going to have to go to $30, $35, $40. It's not going there as fast as most people want, but it's eventually going to get there because almost all of the potential new silver mines over the next 5 to 10 years are all much lower grade, are all much higher cost, and they will need as a minimum $30, $35, $40 an ounce silver in the not too distant future. I would say under a decade. So as long as demand does not collapse, there will have to be new price floors for new supply to come online to either grow supply or to replace the reserves of the current annual supply that is being mined right now. And that is a more comprehensive picture of James Turk's managed retreat. The supply side is very heavily involved in the managed retreat. The bullion banks cannot bankrupt all the miners because they still need the metal for industrial end users. In the case of silver, especially, and for gold, they need to appease central banks and private sector demand in China, India, and Asia. And for the metals trusts, like the different Sprott Metals Trust.